this is a time that picking some credit investment um, to be senior in the capital structure, it's probably better than just go to buy something and hope that it's a V shape, because we don't know whether it's a W or U or L something. Right?
Hello and welcome to The Yield. Today I'm going to be talking with Collin Lau. Collin is the founder of private equity firm BEI Capital, and Collin was also the former global head of real estate at China Investment Corporation, China's sovereign wealth fund. Collin, great to see you here today. Just want to start things off. If you can give us a brief intro to BEI Capital.
Thanks, Neil. Nice talking to you today. BEI was actually founded by me in 2012 after 4 years with CIC in Beijing, heading up global real estate, being co-head for the European private equity. So what BEI does was essentially two things, investment into real estate and also investing in healthcare. And on the real estate side, we are the investment manager, the asset manager. And in the recent years, we've been starting to incubating our own operating platforms. So essentially, we are able to be adding values to any real estate that we are investing into.
Obviously, health and wellness is sort of central to your platform. You must be seeing a lot of interest in that sector at the moment, what with the COVID crisis and the way people are thinking about how property will need to evolve as we come out of this pandemic situation.
I think we are very fortunate, very blessed. Because over the last 4 years, we've been now, by ways of various mergers, creating the largest independent specialist healthcare service group in Hong Kong and Macau. So we have about 335 professionals with about 85 doctors. So we are really into operation. So with that network, it enables us to go with a lot of in-depth knowledge into medical real estate. And also at the same time, we are very exceptional because back in 5 years ago, we've been doing a company that specialized in disinfection technology under the medical advice of Professor K.Y. Yuen of Hong Kong U, who's the hero of SARS, fighting SARS in 2003. And that company a year ago was having a partnership with MTRC, much ahead of the COVID-19. Now they are penetrating into many of the public transport system, helping them to disinfect and sanitize. So this kind of expertise are helping us to better run our real estate and asset manage. Especially today, there's nothing more important than to just disinfect, decontaminate for the purpose of restoring customer confidence that this is actually a safe place to go, be it a hotel or shopping mall or office.
And as we come out of the crisis, do you think that the lessons we've learned will be quickly forgotten and people will go back to their old ways? Or do you think that, wellness, healthcare, safety will be a key part of people's thinking going forward?
I think for the pandemic going so far, the impact is so global, so significant that within people who are alive, multiple generations, I think is just simply impossible to forget. So I would expect that the determination to go on wellness building, the determination to make sure the places are being disinfected are just going to be an ongoing and a sustainable phenomenon. So there was a time that when we talk about wellness, it seems to be a nice to have. But today it's about life and death. It's about actually in the interest of the public health and also in almost all the public policy that, we don't want to infect the elderly people. We don't want to invest people that are easily being infected. So I think that given the pandemic has been seeing its second wave or third wave, um, the most optimistic view is not going away until the vaccines are coming out. But even after the first round of vaccines, I don't think everybody is willing to take it. I think people will observe for a little while. So that by itself is going to drag on for a couple of years. And not to mention, after this, there could be another kind of special flu or special coronavirus. So things will be recurring. This is what I'm seeing. And this is having a significant impact to real estate operation.
Do you see a role for prop tech, for technology in monitoring sort of, safety and cleanliness and things going forward?
Positive, definitely. I think prop tech, more than just about big data or kind of a devices to make sure it's intelligent. I think today is most important that we must make sure whether the air are clean or whether the points of surfaces are clean, or whether even we are wearing something, uniforms or clothing, our shoes are clean. So I think that the prop tech is going into a stage that it's not just about intelligent devices. It's not just about robotics. I think it's a lot about the standard that we want to be working, staying, and just experiencing with.
And going forward in 2020 and looking forward to 2021, where is BEI Capital focusing? Where are you focusing your investments on at the moment?
I think we are going into a point of a cycle, which, for example, in Hong Kong, that if anything was bought in the last 3 or 4 years, is now going into a downturn. So I'm very interested in real estate credit. Credit means that I think there are people who needs to borrow some bridge money or some forms of a loans to extend their investment period. I'm also pretty interested in medical real estate, as we are one of the very few groups who really understand the Medicare professionals. There's a lot of industry protocols that they need to observe. I think the same thing is not just about here in Hong Kong or China. I think that around many of the global gateway cities, I would say that this would be, a couple of those two things, real estate credit and medical real estate, are something I would love to see more.
Absolutely. Well, obviously, logistics as well seems to have been having a reasonable time of it. But now that everyone's working from home and ordering online and things like that, is that an area that you're looking at?
I think logistics, ever since I invested in Goodman and GLP about 10 years ago, the last 10 years have received a lot of attention. So I think that probably is quite fully priced it. I think people raise money on a popular subject, but often find it very challenging to list up, to actually to be able to realize the full values. So I would say that on the whole about logistics, whilst the e-commerce are increasing, I would say the conventional retail and accordingly the warehouse storage spaces requirements are going down. So on the whole, I think it's a fine investment to do some logistics, but don't expect it will just be repeating the same as about 6-7 years ago. Data center is interesting, but again, in fact, back about 16 years ago, I used to be the CEO for a IT networking company as one of our private equity portfolios. So I continue to be interested in data center, but I would caution people to understand that data center has a very long leasing up period. Either you lease it wholesale to big tenant, but your profit margin is becoming more diminished, or you are leasing up to smaller co-location, smaller tenants, but it's taking a longer time than one would expect. So between the two, the capacity is also quite limited because there's a effect about stronger power of the machine, but actually getting smaller. So whilst the data requirements are increasing, but actually on the other side, the boxes are getting smaller.
Sure. Just on another subject, cross-border investments at the moment. Your thoughts on that? Must be quite tricky, and with all these sort of, you can't travel. Due diligence must be challenging. What are your thoughts on cross-border transactions?
I think you're right on the spot. Real estate, after all, you need to be going to do a site visit. Otherwise, just reading the pictures and try to make a decision sounds very risky, despite all the VR and all the video technology. So I think in the near term, for the next 6 to 12 months, I would expect the activity level to be substantially down. And number two, I would also believe that there's a gap about the prices. So on the selling side, they are seeing that the interest rate is historically low, so they are not willing to substantially cut the prices. But on the real economy, everybody knows that almost the whole world are suffering. So it's very hard to expect the rental growth or any rental income not to be going down. So I tend to think there will be some oversupply in offices, definitely oversupply in retail. So in order for us to look at some bottom fishing, some bargain hunting, I think first the practicality of being able to travel, and second, to come to a more realistic clearing price is going to be the two most important factors.
Absolutely. So your investments, I guess, must be sort of focused on Hong Kong. You're sitting in front of a fabulous painting there of Hong Kong. How is Hong Kong performing at the moment?
Hong Kong, of course, is undergoing a very difficult time for a year. I think the real economy suffers a lot. Amongst all the real estate type, the residential is quite amazing. I think they are, after correction of 5 to 10%, I think they are standing quite nicely. But I think the commercial real estate is probably, it depends. Very prime retail probably go down half the rental. Commercial offices, I would not be surprised to go down by 20 to 30% in rental incomes. So I think the near 1.5 years to 2 years will remain to be tough. It takes time for the economy to adjust. I think it won't happen as the same as 2004 when China was releasing all the tourists to come to Hong Kong. I think that impact will be much more reduced this time. So the economy will be adjusting. For those who still want to do business with the Chinese market, I think they stay. For the minority who would be trying to focus more on the other part of Asia, maybe some of them will move to Singapore.
Sure. And what would be your advice to your fellow investors at this time?
I think this is a time that picking some credit investment to be senior in the capital structure, it's probably better than just go to buy something and hope that it's a V shape, because we don't know whether it's a W or U or L or something, right? But long-term Hong Kong, I think after all, is an integral part of China. So if you feel optimistic about the Chinese future with the 1.4 billion consumer market, I think Hong Kong is fine. After all, it's with limited land and limited land resources, real estate resources. So I think over medium, longer term, there will be some good value-added opportunities. I would say that something with medical is a nice spot.
Sure. Something with a healthcare, wellness, and cleanliness, safety angle as well.
Yeah.
Fantastic. Well, that's been very interesting insights there from you. So thank you very much for joining us today.
Thanks a lot, Leo. I hope it's helpful.